All right. Good afternoon, everyone. Thank you very much for joining me. My name is Huzefa Hamid, and welcome to this week's market analysis with Daily Forex and FXTM. Before we begin, just a standard risk disclaimer. You've probably seen this type of thing 100 times. Daily Forex essentially will not be held liable for any loss or damages. And today's webinar is really for educational purposes only. We're not giving trading signals. And remember, there is always going to be a risk when you're trading, especially leveraged instruments such as Forex and futures. Okay, with that out of the way, let me tell you a little bit about myself. So my name is Huzefa Hamid. I am one of the senior analysts with Daily Forex, and I'm a Forex and a futures trader. I'm a predominantly Forex trader, and most of the pairs that I trade are the majors. So everything against the USD, Euro USD, pound dollar, USD CHF, Aussie USD, the usual suspects. And I trade a couple of futures contracts, natural gas, crude oil, the S&P equity index. Now, the most important thing I can really tell you about myself, though, is I use technical analysis for my decision-making process. Now, that term can mean different things to different people. So for me, what it means is that I do not take into account economic data for making a decision about when to enter and when to exit the market. So I'm looking at just the chart. I look at the economic calendar. I want to see what big news announcements are coming, what high impact announcements are coming, how they may have, because they will drive liquidity into the markets. They will push trends. So I want to see what will be what and when are the drivers of those trends. But I'm not looking at, for example, okay, this is the interest rate announcement. This is what the forecast was. What does it mean for this economy and so on? So that's the fundamental bucket, which I'm not involved in. I purely look at the chart, and it's mainly the price chart. You're going to see my charts in a few seconds. And it's a pretty clean price chart with support and resistance, bare bones, not many indicators. I sometimes throw a fib level on there, and really that's about it. So I'm based in Toronto, Canada. I've been here since 2010, born and raised in the UK. Just to get a little bit a sense of my audience, I know we've got people logged in through Zoom, and some people have come in through Facebook Live. So just if you're in Zoom or in Facebook Live, type in the city that you're in. I'm really interested to know where people are. So if you have a second, I'm going to give you 30, 60 seconds, especially the guys in Zoom. I've got the Zoom chat window open. Dan from Liverpool. Hey, Dan. Nice to meet you. Madar from Houston, Texas. Great to meet you. Dan, I worked in Liverpool for about a year or so. It's actually such a great stint. And have I been to Houston? Have I been to Dallas? I don't remember. It's Houston. It's definitely Houston. I went there twice. It was such I had an amazing trip. You're having better weather than I am. All right. I always hope that somebody's around my hood. Someone's around Toronto, and I know things are a little bit in lockdown at the moment, but maybe grab a street coffee. But so if you're ever in the Greater Toronto area, this is a sincere offer. Give me a shout, shoot me an email, and I'll be really happy to meet with you. Trading can be a lonely business. It's always great meeting other traders. Okay, so in today's market outlook, what we're going to do is have a quick look at the economic calendar for a couple of minutes only. I just want to go over what's happening, what will potentially drive the markets, and then we're going to look at the actual charts. So we're going to go through today's Tuesday. I'm going to start with tomorrow, Wednesday, Thursday, Friday, and the following week. So probably over the next 6 or 7 trading days. So tomorrow, these are all kind of medium, high impact news announcements. Tomorrow morning, certainly for me, in Eastern time, CPI data is coming out, which will affect all the majors. Then later on in the morning, Bank of Canada rates really going to affect the USD CAD and CAD pairs. Then crude oil inventories, again, affecting all the majors. Very specific time, 1:01 p.m. Eastern time, there's a 10-year bond auction that's going to affect the majors. So tomorrow is a big USD majors day and a little bit of CAD there as well. Thursday, your monetary policy statement from the ECB, and the press conference 45 minutes later from the European Central Bank. Friday, CAD numbers coming out, employment numbers coming out from an organization called Statistics Canada. So really tomorrow, Thursday and Friday, Euro USD is going to be massively affected, and really the majors, and look at the USD CAD to see what's going on. Retail sales on Tuesday next week. Wednesday, the Dutch election is happening. Elections in Europe are super interesting. It's such an uncertain election environment at the moment. Wednesday, this is the following Wednesday now, CAD CPI numbers, crude oil inventories the same day. In the afternoon, FOMC statement and Fed funds rates. So a lot of USD stuff coming out. It's going to be a busy 5-7 days. FOMC press conference about half an hour later. And now we're starting to look at the Asian pairs pick up. GDP announcements from New Zealand on following Friday. Employment numbers from the Aussie dollar, Australia. Thursday, pound stuff, MPC rates, Monetary Policy Committee. CAD non-farm pay employment from CAD. And the Philly Fed Manufacturing Index. So what we haven't seen is anything that's affecting the Japanese yen, and then the New Zealand again GDP numbers. Oh, we do Friday Bank of Japan monetary policy statement, and more CAD retail sales. So that gives you a kind of overview of the economic calendar. If you want to find out really some economic calendar information, FXTM does a great job of providing that. Go to their market analysis tab and click economic calendar. So market analysis and then economic calendar, and then you get the economic calendar that pops up. There's a button there that says show filters. When you click that button, one of the filters that I keep on for this economic calendar is I keep all the boxes ticked for the different types of announcements. I'm not fussed about whether it's a political announcement, interest rate announcement, central bank, and so on. If it affects the market, it affects the market. But the volatility, I look at just the medium to high volatile. So what will really impact, or historically has impacted the markets. And the other thing I think is pretty cool about FXTM is they have a signals page of the top performing strategy managers. If you're interested ever in following anyone, it's a pretty robust, detailed platform. So you can see the number one strategy manager, you guys rate of return, which is important. The days open. So he's been open for over a year, 398 days, number of followers, and he's managing 1.1 million. So you can go through the strategy managers in that effect. So how do I look at my chart? So let's talk about timeframes. When I'm looking at timeframes, I start off with weekly, daily, 4 hour. So that's really what I consider the higher time frame. So I draw an imaginary line from 4 hour downwards, and then I consider the lower time frames to be hour, 15 minute, and 5 minute. Really, I don't really look at the 5 minute much these days. I go down as much as the 15 minute to place my trade. So my analysis is done on those higher time frames, weekly, daily, and 4 hour, and the lower time frames, hour, 15 minute, and 5 minute is where I do my execution. Okay, so I'm going to drop this PowerPoint for a second, and we're going to go straight to looking at some charts. So the first thing I want to start off with is the dollar index. This is really where I kind of base, I get an overview of how bullish or bearish do I want to be with the majors based on the dollar index. And it's at an interesting point at the moment. So this is the daily chart, and it goes back from earlier this year. So this is the point on the left is around earlier last year, rather, February 2020. So you can see this is when COVID kind of really unfolded around late February. This ties in with the high of the US equity market. So before, well, not the most recent high, the 2020 high before it dipped before COVID, before the kind of the financial impact of COVID became apparent, became a reality. So late February, nice big dip, push up, made a high, and then really it's been trending down. You've just seen a series of lower highs that defines a downtrend, broke this key support level, turned into resistance, made a support in between, broke it, it tested as a resistance. Now, my assumption was that it was going to continue trending down because it didn't want to go back above this, but it's made a second run at it, and it broke through recently in the last 3 or 4 trading days. So now I'm starting to, it's a bit of a pullback. I think this, if I extend this line, I suspect this yellow line, this previous support, which was a resistance, is now going to be tested as a support. And there's a good chance now we're going to see a bullish US dollar index. Now you can see this gray area marked below. So if I zoom out of this chart, it's really a long-term support area. This is where it turned around. So if you go back to 2018 now, early 2018, you see the market had been trending down for a year and a bit. It stopped around this level here, moved back up. Now it's reversed. It came back into the same range, and now it's reversed. So that it's not a coincidence that this is where it's choosing to turn around. So that's my dollar index. I'm generally bullish dollar index. I think it's a little bit of a pullback happening now, and I think I suspect this yellow line will be the test as a support for it to move maybe sideways to bullish. Okay. So starting off with the Euro USD weekly chart. Now it's turned around it's come up to a level where it met previous resistance back in late 2017. Spent the remaining year and a bit trending down. It's come back up, and it's reversed pretty strongly at that level. So if I zoom in a bit, you can see some big, nice bearish candles. And I think, so I'm bearish on the long-term picture. I'm bearish Euro USD. If I zoom out again, my 2 fib levels I tend to draw are the 50, 61.8%. So I find them, they're pretty, they act as a good turning point for big moves. On the weekly chart, it's often known as an ambush trade or a halfway back trade. But that's where it met resistance prior. It's come back into the same area here. So now going down to the lower time frames. So this is the weekly. Now I'm going down to, so I'm bearish essentially, looking at the daily chart now from weekly to daily. I've drawn this line here. This is, so the market had been trending up. And now this is the support that is broken. It used to be a prior resistance here. Tested support. My assumption was it's going to continue trending. It didn't. It moved back down. I think this area here is going to get tested. 1961, 1962, 1.196162. I think that's going to be tested as a resistance, and it's going to trend down. So I'm bearish, bearish Euro USD. So you can see that on the hourly, it's pretty clear. So you have, let's see how many pips we have until we get back up to there. We've got about 60 pips or so. I don't know if it'll meet, if it'll go all the way up there. And if I draw my fib line here, this is where I'd like to get in. Now, the issue is, of course, is that if you're waiting for a pullback, which is quite deep, you could miss the move. It could just only stall around here and then move down. But that's where I'd like to see for kind of the least risk on my trade. I'd be surprised if it breaks through this previous support here. So I think it may come around this area here before I'd like to go short. So that's Euro USD. Generally, my outlook is bearish. I'd like to see the pullback go a little bit higher. GBP USD, very similar to Euro USD. It's been trending down, and now it met resistance. I don't think it quite hit the, or it did. Just about hit the 50% level first time round, not the second time round. Let's make sure that's marked properly. But it's stalled before it really got there. You can see a nice rejection candle there. It made a run up that week of just over 200 pips before them pushing down about 300. It's a 300 pip week range, but it pushed down about 100 pips after making that run up for about 200 pips. So nice rejection there. So my bearish pound dollar. Let's see what that looks like on some of the lower time frames. This is a 4-hour time frame. Moving down, it's made a sequence down. I marked this line last night. I thought it would hold and push down. It's broken back above it, but really this is the high sequence of lower highs that you want to look out for to not be broken, to maintain the downtrend. It's a very new downtrend, so let's see how this plays out. So we could potentially be seeing another high in this region for it to push down. And throwing a fib up there. So just on almost, I think, to the pip. Let's have a look at that on a 15-minute chart. Or hourly might be clearer. Almost to the pip, hit that 61.8% level, and that's where it's stalling at the moment. So bearish. This is not a bad area to get in a short. It's showing signs of stalling. Nice big rejection candle there. I'm bearish pound dollar at the moment. Okay, so Aussie dollar. Aussie dollar, you can see all these dollar trades now. You can see the bit of a pullback. So I wonder how long the US dollar will remain, the dollar index remain bullish. I'm bearish Aussie dollar. And let's throw another big fib level there. Broke the 61.8% there, but it's now tapped it again. Let's remove that for clarity. There you go. So I'm bearish Aussie dollar, and this is my my current lower time frame chart, or hourly, or for this is the 4-hour chart rather. So made a big run down, and then this is my support level that I've drawn. Push back down again. It's broken through that support. This is the key support that I really want to see it break here. I suspect that the price will probably tap at least this support level here. And let's throw another fib level here. It hasn't quite hit this the 50% of this little run down yet. And we've got a good, it's about 130 pips in there to take out. So I would, from this point on, I would manage the trade through the 15-minute time frame, showing some decent resistance around the 15-minute area here. So that's my view on the Aussie dollar. I'm short the Aussie dollar. New Zealand dollar, very similar. I think the New Zealand dollar is a clearer picture than the Aussie dollar. And this is the weekly chart of the New Zealand dollar. For those of you that have seen me present before, I've usually used a black screen with red and green candles. Decided to switch it up today. I love the, this is how I started trading. It was with black and white. It reminded me of a printed page. It's black and white candles on a white background. Anyway, that digression aside, here we have the New Zealand dollar. So it met this resistance area here prior in, so we're talking about 2016, 2017, came up, and a couple of weeks ago, made a big, tried to push up, made a nice big rejection candle right there. And so this is the weekly chart. So I think it's going to turn over for a bit. And this is it on the daily. So the price squeezed, been trending up. There you go, been trending up. Price squeezed into this triangle, broke out to the upside, and immediately, swiftly got pushed back down. So over 2 days, made two very bearish rejection candles, covering about 240 pips or so, and right back into that triangle territory. had now broken on the downside, gone through essentially the downside of that triangle. So if you extend that line, you see the downside of that triangle. This is the key support level I really want to see it break. So I marked this last night, and it's now stalling against this this key support level. So looking at the hourly, this is the range it's in at the moment. It broke through this minus support in the hourly, and this is the. I'll zoom out for a second so you can see where I'm getting this range from. This is the support that I drew on the previous slide, or its previous chart rather, on the daily. Looking at the hourly, I think it will. I'm hoping for it to break down through this to find a short. But this is the range it's in at the moment, and if you're feeling, I don't know if brave is the right word, but if you're feeling that if you're feeling quite confident in a bearish view, you could certainly wait till it hits kind of the top of the range, which also kind of coincides with that 61.8% level, to place a short position on the New Zealand dollar USD. Okay. Dollar Swiss. So this is an interesting chart. This is the weekly chart, and it's a long-term chart. Dollar Swiss is erratic at the best of times. It's a smaller pair. It's one of the, I think, I don't know if it technically falls into the category of a major, but if it does, it's one of the quote unquote smaller majors. Now, it made this support area back in 2013, 2015, late 2013, early 2014. So we're looking at, I'll draw the triangle again so you can see it. You make it. That area here. And then pushed up. Now, obviously, it broke through this support area here. Now, for those of you around in the markets at this time in 2015, the Swiss bank unpegged their currency. Swiss central bank had always provided a floor, a stated floor for the Swiss franc. They removed that floor. They removed that mechanism. The markets went absolutely wild. It was like hundreds, I think maybe even thousands of pips move in a day. It's a big gap. A lot of brokers actually went, accounts were wiped out. A lot of brokers folded at that time because of it. But really, this is I'd say the more significant technical support. Comes back down to it. Been trending down for a while. Comes back down to it. And absolutely, buying is just stepping. The bull's really stepping, especially over the last 2-3 weeks. And it's been on a real run, like a real tear. So you can see that in the last couple of weeks. So if we go down to the daily now and the hourly, so this is the daily chart. This is the main resistance that I picked up on. That it's come up, it's broke through it. I don't know whether it's going to snap back down or if it's going to be tested around as a support. There you go. That resistance. So what's the key thing is what's going to happen here? Is it going to now bounce against this as a support area? It looks like it's 2:30 at the moment in Eastern time, so a couple more hours. It looks like it's going to close. The daily close here is in like 2.5 hours, 5 p.m. Eastern time for these candles. It looks like it's going to close below that resistance. So yeah, it's nipped back above it. And it's looking like it's making quite a sharp reversal at the moment, just on the daily time frame. This is the hourly chart. This is the area for that resistance here at the top of the triangle. There's a bit of a support. Let's see if it holds this kind of intraday support from 5th of March, which is Thursday, I think. So let's see if this area here holds. If this area holds here, I'd be bullish. I'm worried about, the only thing is I'm worried about the strength. strong bullish candle followed immediately by a strong reversal candle. And you can see that historically in charts, it does turn the market around. You saw that right here, for example. So here you got a bullish candle followed immediately by a strong bearish candle. You're seeing that play out again. So let's see how this closes the next couple of days. It's been on such a tear, you're going to expect some kind of a pullback at some point. So you could see a pullback here. Intraday, I'm more bullish. On the daily, I'm starting to feel a bit bearish. This is still a bullish trend, though, on the whole. So let's see how this holds at the moment. So if you're an intraday trader, I'd stick with a bullish trend, but just be cognizant that keep your stops tight and so on. It's looking on the daily, it's looking like it could be turning around. USD CAD to finish off. We want to finish off at 2:30 on the dot. USD CAD. I'm not seeing. So this is a long-term picture. It's made a. This is a weekly chart. Came down to this range here, and it's on 2016, 2017. This is really where it turned around. It's now approaching getting back into this range. So it's been on a downtrend. There's a chance that this area could be used as a reversal, could start turning around. This is the 4-hour chart. The problem with the USD right now, there's not a trend. I always cover the dollar CAD, but there's just not much of a. It's starting to get messy and very rangy. So if you're an intraday trader, I can't see anything there that I would want to partake in. It's not very smooth at the moment. So dollar CAD, I think longer term, it will go sideways or turn around. Maybe it'll develop some nice ranges you can trade in and out of. But I think there are better trades at the moment. I think euro dollar is certainly a better trade. Pound dollar is certainly a better trade. Aussie dollar is certainly a better trade than the dollar CAD. Okay, it's 2:30 p.m. Eastern time on the dot. I'm going to give you some final bits and pieces to think about. Some final thoughts. There you go. If the chart isn't clear, always stay away. Wait for your opportunities, wait for clear areas to enter. Mind your risk always. Always have a stop loss, have a target that's multiple times your risk, at least one time at the minimum. If you want to reach out to me, if you've got questions or you want to hang out for a coffee or speak to another trader, happy to meet you. Huzefa at dailyforex.com. So those are some of my final thoughts. We're going to post some bits and pieces. FXTM, you can post it. You can visit us there. And FXA is FX Academies, is Daily Forex's Academy website. So if you want to just brush up on your skills, trends, support resistance levels, fibs, some indicator usages on there. It's a good starting point, or just a refresher point for you. All right, 2:32 p.m. on the dot, with a couple of minutes over. Thank you very much for joining us. I really appreciate it, and have a fantastic rest of the week. Take care.